Hello and welcome. Yesterday, the euro-dollar pair was trading with high volatility amid the release of the macroeconomic news in the eurozone. According to the reports, inflationary pressure in the European countries was gradually easing in December 2021, and the employment data was rather encouraging as well. Thus, the number of unemployed people declined in Germany. Against this backdrop, the movement of the euro was rather sharp within the day. Bulls managed to protect the lows of December 29 and the key support level near 1.1280. In addition, weak data from the US, which showed the ISM manufacturing PMI fell to 58.7, contributed to the pressure on the US dollar. As a result, the dollar eased in the second half of the day, and the pair moved about the area of 1.13. At the end of the year, this was a key level at which buying activity was rather high, and several attempts were made to develop an uptrend. Yet, bulls retreated from this zone, so now their main goal will be to regain control of this range and to keep the price above the support level of 1.1280. As for fundamental factors, today traders need to focus on the PMI services data and composite index in the eurozone. These reports may slightly lower investor risk sentiment. Later in the afternoon, ADP employment data will be published in the US. The indicator is expected to drop significantly. In addition, US composite PMI and services PMI will be out today as well. By the trend of the day, markets will be waiting for the FOMC meeting minutes from December. So, the economic calendar is full of events today. Let's see how the pair will behave near the support area at 1.1280 and the resistance level of 1.1306. False breakout in the range of 1.1280, 1.1273 will be a good signal to add more long positions on the euro, with further breakout and consolidation above 1.1306. A top-to-bottom test of this range will create an additional buy signal for the euro. In this case, the next target will be the levels of 1.1329 and 1.1354. From there, the quote may easily move further, so 1.1381. I recommend selling the pair from 1.1307 or 1.1329 on a false breakout, considering a possible correction of 15-20 pips within the day. Short position on the rebound should be opened only from the key resistance zone at 1.1354. If there's no activity near 1.1279, we should expect it to settle below this area or form a false breakout at 1.1306. This will be another sell signal, which can be followed by a deeper fall of the price to 1.2050 and 1.1224. We should keep in mind that the US Federal Reserve is planning to rise the rate this spring, so we can predict that the US dollar is likely to continue its bullish trend. Speaking of the British pound, the pair keeps hitting new heights as the bulls assert their strength in the market. The level of 1.3510 is located below this moving average, so a false breakout of this level will serve as good buy signal. A breakout and consolidation above 1.3553 will create an additional entry point for long position, with a prospect of rising towards the area of 1.36 and then towards 1.3649. From these levels, I recommend selling the pair on the rebound, considering any possible correction of 20-25 pips. In case bears manage to protect 1.3553 and there's no activity near 1.3510, the price may settle below this range. Today, macroeconomic news is expected in the UK, therefore bears may try to keep the pair inside the sideways channel. A breakout and consolidation below 1.3510 and a short reversal from bottom to top will create an additional entry point for selling the pair. then the price is likely to return to 1.3431. It's possible to go long, keeping in mind a possible correction of 20-25 pips within the day. Well, that's all for today. If you have any questions, please post them in the comments below. Good luck.